Oh, good morning. I didn't even realize that we're past the hour of 9 o'clock. I was busy looking at a few things. So, so really not much going on in the news other than the Fed. Um, just trying to pull up some news right now. There we go, earnings calendar. CDC is recommending that they institute indoor, or recommending that people, even vaccinated people, wear masks. But that's obviously to protect the unvaccinated. So it doesn't appear that there's additional risk to people who are vaccinated. It just appears that we carry it and they contract it. So we, meaning the vaccinated, carry it, and the unvaccinated contract it. So, my question is why do we need to inconvenience ourselves for people who are opposed to taking steps to protect themselves? It's obvious that if you're vaccinated, you can have a breakthrough case, but it's not that severe. So I don't know. Why wouldn't you protect yourselves? I mean, really, do we need that personality around in our society? Just hey, survival of the fittest, man. Yet, the end result is that we will have the people that we genuinely want in our population, and that would be well thought out individuals. I mean, I'm not pro-vaccine. I don't get vaccinated for a lot of things, but I weigh risk reward, and I think I had mentioned that I have 4 stents in my heart, and it just seemed like the reward of the vaccine outweighed the risk. So I took it. I mean, I never take flu vaccines or anything like that. I have a pretty strong body, and I could rely on it. And it's an intelligent, well thought out, well researched decision. I mean, isn't that the society we would all prefer to live in? I mean, enough with all the laws to protect the ignorant and things like that. I say, let the chips fall where they may. The argument could be that they're hospitalized and it's a drag on earnings, it's a drag on society. But the reality is that most of these people eat poorly, smoke, and they're actually the burden on our society going forward. I mean, it's just consistent with the frame of mind, the mentality. And those who take good care of themselves aren't a burden on society. It's that simple. And there are even those who take good care of themselves who don't get vaccinated, who are not a burden on our society because they're healthy enough to overcome this stuff. So, hey, Anthony, wow, that's pretty early for you. So it's just an interesting question. I mean, I didn't like the idea that we closed down our society anyway. I mean, it was unfortunate. A lot of old people were passing away and things like that. But, I figure when I'm old, I'm going to die. I kind of have that in my head. So I like to live as though I'm going to die soon anyway. I think that's a better practice than everybody worrying about getting every last moment out of it. Just make the moments quality, and then it's not so bad. I like the Viking theory, where they lived to die and go to Valhalla. So it seemed like there was a reward for living well, and I think that's what we ought to preach. But that's not going to make us any money. It's just probably going to make me lose subscribers. So anyway, here's the earnings. Again, there's going to be some good earnings folks out there. So I look at tradingeconomics.com, and you can go to markets and pull up earnings, and you can see everybody who's reporting every day. So I don't have to go and call them out, but we have some big names out there. Oh, there's Ford also. Oh, and look, Ford is expected to lose money. That's interesting. I bet they make money and blow away those earnings. And then you can go to the calendar in that on that website, and it will show you what the news is, the financial news, things that people are looking at, and then they grade it. There's actually several colors. I just go for the red highlights. but you could make that selection in your settings or impacts, I think it is. So anyway, here's the Fed, 2 o'clock, Fed rate decision, 2:30, Fed, the press conference. That's probably the what's important here. And just so you get an idea of my frame of mind on how I think about the markets. So basically, I have I do the income trades, the spread trades. So I went very conservative. Normally, the week before the Fed interest rate or a Fed meeting, I put on a lot of positions because I expect that the market consolidates and doesn't do much. But based on what I'm seeing on the daily charts, I really took a conservative position because I don't feel as though the markets can handle a surprise or a hit. Or even I feel as though the markets are looking for the pullback and they're just waiting for that. So I think, and I could be very wrong, and that's okay. I don't mind being wrong. But I think that we're going to get a pullback to about the 325 range. You see this divergence on the daily. You see the daily rolling over here. That makes me uncomfortable. I mean, the market is definitely volatile, and it's vulnerable to a move. And this is a real aggressive move up right here. So if you looked at it structurally, I mean, structurally, that's not a stable structure, right? You want to see a little support, it come down, consolidate, and then move up. So there's really no foundation to support this move up. So again, we're vulnerable for that move. So anyway, all of my maneuvers in the market have been conservative, just based on that avenue. So I'm making money, I'm in the game, but I reduced my risk. And if I miss, if I miss it, that's okay. But that's what trading is, man. You got to decide on how you manage your risk and where you mitigate your risk. And sometimes you're right, sometimes you're wrong. But if you don't protect your downside and you're wrong in that direction, then it's an incredible hit to your capital, and you have to make that money up, which just sets you back. So it's less devastating missing out on profits than it is taking a loss. And that's what everybody has to get in their head. And normally I find new traders look at it backwards, and everybody is looking for the win and chasing the money, and end up making bad decisions. Or they get into a trade and ride out the losers and cut short the winners. So and it's really difficult psychology to reverse, but it's something everybody should do. It's important. So anyway, that's it. That's how I look at the market right there. If we look at CNBC, there's really nothing going on. Just what's hitting it. It's Tesla moving out of malls. Dylan, another blow to shopping centers. That's an interesting spin on that story. But yeah, I guess a lot of people will go to a mall and check out a Tesla, and that's got to drag it. Actually, I saw my first Tesla years and years and years ago at a shopping mall. I think that was 2011. Mortgage rates drop. Pfizer making a killing on selling COVID shots. It's interesting. Shakeup in China raises questions over future international investing. So my little spin on China is they have some antitrust laws that they enact, and really, if you analyze what they didn't do anything we wouldn't do here in the States. It's just being a dictatorship. They could just do it in one clean sweep, so it kind of knocks the winds from your sails. Where when we do it, it's gradual and there's a progress, or it's progressive, and it kind of mitigates the damage. So it's frightening to invest in a Chinese company because you never know when regulation's going to change and it's going to hit. But it doesn't seem like their rules are draconian. It seems like they're trying to establish more of a free trade environment with the rules they're enacting. It's just the manner in which they're doing it is very aggressive. So, I mean, I really hate China personally. But I wonder if these actions are just creating value to invest in. And I don't think that I would make the move, and I could probably see money if I took a look, but just out of sheer ethics. I mean, I don't like the Chinese government. I certainly don't want them to continue to grow in power and influence the world. I mean, I don't like anybody that suppresses somebody else for their religious beliefs or life choices, and you know, inhibits people's freedoms and decides what they can think and things like that. So I wouldn't invest there. But and I did. I used to do business in China. I used to do agriculture trade between the Philippines and China. But once these guys took a turn for the worst, I wrapped that business up. So, anywho, so it's interesting. If you guys want to look for value, you may want to look there because, again, I don't think that their regulations are draconian. I think that a lot of the things they're doing is going to support free trade in their country, or as free as it can be in their country, and creating an environment where smaller businesses can compete. So again, these dramatic drops in these companies from this aggressive change in regulation and rapid change in regulation, which you can't do in a democracy, may be creating value. So yeah, you know, you guys, if anybody's into doing homework, you might want to look at things like that. And that's investing stuff. You know, I wouldn't participate in it trading because it's too volatile. But you know, if you're down on breaking down a company and looking at their earnings and figuring out what their projected earnings are and the environment they're doing businesses in, China might be it. How about that new carbon wrapped motor from Tesla? I haven't heard anything about it. I mean, you know, Elon's always exciting, man. You know, I mean, the guy's so cutting edge, man. I love that guy. I think I'm having like a little crush on him or something. But an impressive character, and something always interesting coming out of what he's doing. I'm actually just looking for information on that. I mean, it's just really exciting. So it's something I'm going to look at and see what it's about. Hopefully I remember to get into it tonight. Yeah, we all got a crush on Elon. He's mine. Don't you mess with my man. Yeah, he's a really, really exciting character. So, anywho, that's what we're looking at. What we got? We got 15 minutes to the market. Bitcoin's fighting its way up, man. We're looking for that 41,500 break, and that's a good long right there. I mean, I don't even have to look at the chart. I've looked at it so many times that I know that to be the case. Apple's taking a beating. AMC's taking, AMC's off a little bit. Let's take a look at that. See what developed. Nothing really. We got that trend line right down here. I mean, if it breaks that trend line, it's on its way down. I mean, I don't want to be a neg or a naysayer, but I really want to see this thing tank. I guess maybe because I have a professional background, and I've seen this 100 times where, novice folk come into the market, think they figured something out, and they're a bunch of big swinging dicks because they get it right once or twice, but they don't recognize what they're up against. And you're talking about PhDs and shit like that, people doing this for 30 years, and they figure the risk. And I think that might be more my motivation. Just that I find that a lot of newbies underestimate the value of risk management. And I think that these little smacks in the face are the tuition you pay to learn that lesson. That's really, really important. And you're going to, I love the joke that Elon just, an alien trying to go home. Yep. You're going to hear me say that time and time again. You have. I'm all about risk management, and that's the number one cause why people don't make it in the industry. To be a superstar is just like being a superstar in baseball. The chances of that happening for people are slim. But to make a living, it's just a matter of repetition. You keep doing it, learning your lessons, and control your risk, and everybody can make money in the market. To be that multi-million-dollar producer, or the guy outperforming the market by 100%. That's like being a superstar in sports. Probably not going to happen for everybody. Probably not going to happen for 90% of the people who can make a living at this. But to make a living at this, you could make $75,000 a year easily. If you just practice good risk management and come up with a set of rules for getting involved in the market. I've said it 100 times. If you just held a 2-to-1 risk-reward ratio, you only have to be right 33% of the time. That's easy. Just keep on doing this. You're just going to keep getting better, and once you're right 33% of the time, hold a 2-to-1 risk-reward ratio, you can start trading cash and being profitable. So anyway, that's why I harp on the risk management. Everybody puts their primary focus on profits, but really your primary focus needs to be capital preservation. Capital preservation. And believe me, that lesson came at a steep price. That lesson probably cost me more than most people will ever make in their whole life. But it's been quite some time since I had a devastating loss, because the lesson is learned. I hope. Who knows? Who knows what the future holds? I might get a mental hiccup. We got 8 minutes to market open. They say you're not really a trader until you lose $1 million. Mm-hmm. Mm-hmm. Oh, look at that. We're up 6 points, eh? We should open up around 409. So we're going to open up in the center of the bar. So here's today's bar. We'll probably open up around 409. I mean, that's a nice little hammer right there, but I don't like the divergence on the 1 minute. 1638 is the break of the high, which is what we would look at going long. And I mean, the 60 minute is rolling around. It did make a lower, well, I don't know, filled that gap. I wouldn't make a move until we broke the high. I mean, I would call this the low, so we made a higher low, so we're still in a bull trend, on an uptrend on the 60 minute. Could take the break of the of yesterday's high, which is the 1638, and then you got 2273 right behind that, and then it's just smooth sailing if we're going to make that move up. I mean, I just don't think that we're going to see any aggressive moves today because of the Fed. Well, cool, man. You're in the right place. If you're trying to learn, check out my Trading 101 videos. I know they're kind of tedious and hard to sit through, but they have good information. You'll have an understanding of what we're doing here, and then just keep talking to me, man. Any questions, anything, I'm happy to tell you. You know, there are thousands of different ways to trade in the market, and they're all right as long as they're profitable. The only one wrong way to trade is not have a plan that includes risk management. That's the only wrong way. So, yeah, you know, there are tons of guys out there that are offering different trading ideas. When the guy starts talking about the golden bullet or guarantees, excuse me, that's the guy to run away from. But yeah, you know, good logical trading philosophies, tons of different ways, tons of different indicators. You know, you use what's good for you. I use the MACD, the Mac Daddy, and I use price action, and that's it. And I've looked at tons of different indicators, but nothing for entry. But I'll look at indicators to manage my trades or get perspective. So, yeah, you know, I have moving averages on my chart, and I use the Ichimoto cloud, gives me perspective. Yeah, you know, just really where the resistance is and stuff. But I know guys who play breaks out of the cloud or breaks through the cloud and stuff like that. But cool, I'm glad you made 20 grand on AMC, lost 10 on space. Okay, you lost 50%, so right there, man, you're showing me that you don't have a good risk management plan, or you don't have a good entry, right? Because if you have a good entry, then you know where that entry fell apart, and that's what your risk is, and that's where you get out. So you need to accept when you're wrong, instead of sitting there and letting this thing fall apart, and you're saying, oh my God, it's gonna come back. Yeah, you know, space is a good long, I call it space, but Virgin Galactic is a good long-term investment. I like where they're going, so I'm in it. I think my net cost is about $22, but I took a lot off the table in the high 50s, expecting it to come back because it was hype. So don't buy the hype, you sell into the hype. And now I'm just trying to decide on where I start building my position again. You know, but I think it's still negative at the moment. Negative. Are we open yet? What the hell? It's the longest 8 minutes of my life. So yeah, I like space. I'm just looking as far as an investment. I mean, it's not something I trade. And there's a difference between trading and investing. You know, I'm not here to trade space. When you trade, you need to understand the behavior of the stock that you're trading. So to be jumping all over and chasing what's happening now, to jump all over and chase different markets just doesn't make sense. You know, learn a stock, learn what you're going to trade, and trade that. Yeah, you know, when I trade SPX because I look at it all the time, and I know when it does this, it's going to do that. If this, then that. And that's how I make my money. If this, then that. And you can't do that on every stock. Everything has its own personality. So, you know, I see these guys running around with their scanners, chasing things. And if you look at hedge funds, they have specialists in different sectors or, you know, different markets on different asset classes. And, you know, it's not like they have 10 traders in the office and they're all trading different shit. The whole office is trading 10 things or maybe 20 things, and each guy is doing 2 things, you know, or one guy's doing 1 thing and another guy's doing 3 things. But you become a specialist in a market, and that's how you make money. You know, when guys are telling you to trade this, trade that, trade this, it's ridiculous. I mean, how do they know how it's going to perform? And how do you know that with 10 or 15 different stocks? It's, you know, on a trading aspect. As far as investing, I mean, you look all over. You look for hot sectors, you look for everything, but that's different. That's buy and hold, and, you know, it's based on value, and, you know, and you're investing. So you can invest in tons of different sectors. Oh, game on. And even then, they have analysts or investment companies have specialists in sectors. I'm just loading up my 4415s. What the hell's going on here now? No, not puts, man. I'm looking for a break of the high. I mean, if it breaks that low, I might consider a put, but I don't really like that I'm trading into the bar. I don't know that I'll take that downside move. You know what? I think 391 might be a good number. could load up the 400 puts. When I say load up, I just mean that I'm putting it, I'm putting that into the trading platform. The Dow filled its small gap. Composite broke its low of the day, but it's not selling off too aggressively right now. Oh. Oh, I'm looking at the wrong damn thing. Yeah, this looks like it's going to move lower. It's feeling a little bit heavy. Come on. I'm going to take one off right here. Just saw a buck. Moving my stop to a break even in case it bounces back at me. I think 91 will be my final target. Come on. Push! Taking another off right here. I wanted to get 96, but it's getting too stally. I got one on, I'm leaving it at a break even. 1 minute momentum is still very bearish. 2 minutes bearish. The 30-second is kind of leveling out right there. So, I mean, it's just above my target. That's why I took my second off. Hopefully it'll just consolidate here and then make another move down. I would like to see the 91.83 area. Which, by the way, is Friday's opening range high. And we're actually trading in between Monday's opening range and Friday's opening range. So we're pretty much consolidating for the past week in that arena. Got a flag on the 2 minute. Oh, it's gonna trigger. It triggered. Go, baby, go, baby, go. Come on, keep going. I'm gonna move my last stop down to that flag. I like to chase those flags. So my stop is going to be hit before I even get the number. $99.03, so I'll put it like $99.05. Come on. Come on, give me the target. New ones, plus. Come on. Mm-hmm. Just waiting for this baby to hit the target or knock me out. Yeah, stop reading your profit and loss, man. Just trade the price action. Look at the end of the day to see how much money you made. You know, because right now I can consider that I just put $4 back into the market. You know, from that low, but and that will make me jump out. You know, but I have my stop at a reasonable position. If it breaks that, it could very well turn bullish. So I'd want to be out. I'm not looking at the dollar amount because that will affect my decision. And the decisions are not about how much money you made or lost. The decision is about does the setup look right or wrong? Or is the setup still working or has it broke down? That's why we have a risk management plan, so that we stick to our plan. And it's about trading. You know, this is where my stop goes. It's not about the dollar amount. You know, that's secondary. If you look at where your stop goes and it exceeds a risk that you're comfortable with, then you either pass on the trade or you reduce your size. You know, that's what people don't seem to do. They seem to you know, just manage it on the money. I mean, this trade is still moving in the right direction. $97.69 is my stop now. I've moved my stop down a little bit, capture a little more. The 30-second momentum is flattening out. The 5-minute is still very bearish. Well, I wouldn't say very bearish, but and it looks like the 2-minute is getting bearish, but we need it to drop right here. See, thinking it was going to bounce, Anthony, and seeing a signal that it may bounce are two different things. So I'm tightening my stops because I'm looking at the signals and they're telling me that this could bounce and turn around. I'm not thinking that it'll bounce. I'm looking at the signals. So I see the momentum kind of pushing up here on the 32nd, and I'm saying, okay, this is losing the momentum to the down, so let me protect some of my profits, move my stop down. mean, I could squeeze another buck out of it on my stop, but I think I'm just going to give it a little room to mess around. It'll probably whip up before it drops down. But we're, you know, in an area of congestion right now. I'm still looking for that 91 target. If we break this low right here, I'll tighten my stop. Well, it doesn't matter where you bought in.